Hello, good weekend to all. This is Adil bringing you a review of the European markets for the trading session, the 5th of April 2021. Please be sure to visit obviously my site there, www.intermarket-analysis.com, but I'm more active on Twitter as usual. Okay, so in terms of the markets, let's get started then. In terms of the market moves, we've seen European markets break to new highs. This is the Euro Stoxx 600, as you can see here. Attempting to reach all-time highs on the Euro Stoxx. Obviously the German DAX is the prime leader. Okay, so we are approaching that now, and given the famous comment this week, the markets can certainly test us from Ms. Lagarde. It certainly looks like the QE train is in full swing. I've certainly highlighted this. The European equities, if you just look at the German DAX for example, the daily chart is off, basically off the charts. We're in uncharted territory right now. Okay, as you can see, ever since we broke that weekly candle, the market's been rip-roaring higher after it retested the breakout. So very, very impressive. The German DAX is the leader in terms of Europe, even though the cases are increasing. The concerns are increasing with regards to European management in terms of the pandemic. Okay, we've had France go back into lockdown, German infection numbers rising, and then obviously the rest of Europe potentially already going into lockdown as well. Now, Euro, as you can see here, we did get a reversal on the actual chart on the daily. I'll just bring up a 4-hour chart. Obviously, stronger USP or stronger jobs numbers certainly helped to a large extent. Okay, in terms of the dollar certainly accelerating on Friday, but nevertheless, we've put in a pivot low about 1.17. It'll be interesting to see if we can hold that low, even though Ms. Lagarde certainly has stated that the market can certainly test us. What's also interesting as well is in terms of European bonds. Let's just quickly bring up the Eurobond here. The Eurobond certainly seems to have bounced from that pivot support as it pushed higher. Obviously, the euro hit at 1.17. It'll be interesting to see now, do we hold this versus the dollar? Okay, it'll be interesting to see how the euro obviously fares. Now, stronger obviously jobs data in the US certainly will help and underpin the dollar. Also, given the fact that Mr. Biden now has talked about increasing taxes again, that's certainly going to help and underpin the dollar as well. And it'll be interesting to see what happens in terms of legislation going forward in terms of Congress. But again, that's a US video analysis. I'm not going to go into that too much. For now, the narrative certainly seems to be that the bonds certainly have caught a bid. Obviously, with the bond prices going higher, that means that yields are going to go lower if the ECB continues to buy. That's the question. Okay, Euro USD certainly plummeting, given the fact that you've had a total shambles in terms of the management with regards to COVID, and obviously France going into lockdown sent the euro even lower, which in turn obviously has triggered the European equities inflation trade. And whether you believe the obviously inverse relationship in terms of exports, that's the aspect as well. And obviously ECB obviously increasing QE certainly has helped Germany to a large extent, given the fact that China is back online and that's one of their biggest trading partners going forward. So this is a very, very interesting scenario. A lot of people are scratching their heads and trying to understand exactly what's going on with European equities, given the fact that they've got a total botched up mismanagement, total incompetence in terms of the pandemic, yet German DAX ripping and roaring to new highs. Again, I feel sorry for the individuals that are attempting to short it based on that. Now, again, always keep your stop losses in place to a large extent. And now, German DAX, I certainly haven't shorted because obviously from a technical perspective, it's stupidity. But in terms of Euro Stoxx, that's one trade that I have certainly taken, expecting the French lockdown to have certainly had that negative effect, and it certainly hasn't. And I was certainly stopped out on my French CAC trade. So I'll just bring up the French CAC trade here. Again, now the daily chart. Okay, so I certainly expect that double top to hold in the back of the obviously lockdown. That hasn't obviously occurred, and the French CAC now is testing potential highs or all-time highs, shall we say. The previous pivot high was 6110 and the all-time high was 6170. So interesting scenario. Let's see what happens in terms of the markets going into it on a Monday. Obviously NFP data certainly did send all equity indices higher, so again that's certainly something to take into account. Okay, now in terms of the FTSE 100, the narrative here, Suez Canal, obviously traffic jam is over now. The blockages are stopped, and also OPEC have increased output. Again, that's two negative scenarios for the FTSE and for the French CAC as well, to a large extent, given the fact that they are commodity heavily weighted towards commodities. Lockdowns eased in the UK, vaccine euphoria, trade certainly is in full swing. Obviously, the US infrastructure plan and obviously NFP data certainly has helped FTSE to a large extent. So we're going to keep an eye on that. In terms of the weekly chart, given the fact that this is a bird's eye view, the key pivot high for now remains at 6870. It'll be interesting to see if we can take that out based on the vaccine euphoria, and obviously given the fact that US stimulus is obviously leading that as well, so keep an eye on that. The bearish engulfing candle is actually in control from Wednesday, so that's the focus for now. And we did have an inside bar on the Thursday going into the Easter break. Again, the interim resistance remains at 6800, which is around the fib 75% on the daily chart. So watch out for that key zone. If you break above that, obviously the bulls are back in charge and we're back to 6900 again. 60-minute chart for now, the support remains at 6712. Okay. And then we've got support further below at 6630, and obviously a lot of support around the 6650 zone on the FTSE. On the upside, we've got resistance here at 6790, 6800, and then ultimately 6810 in terms of the 60-minute chart. The 10-minute chart on the FTSE 100, again, we did hit that pivot low at 6730. We've got gap fill below at 6715. Horizontal support is at 6710, and then ultimate gap fill is around 6670. On the upside, you've got resistance at 6750, 6766, 6780, then you've got resistance at 6790 as well. Let's see if this downward sloping trend line certainly comes into effect. It'll be interesting to see how the market moves now going into Monday, given the fact that OPEC certainly has announced an increase in output, and the Suez Canal scenario certainly is no longer helping the FTSE to a large extent. Okay, again, the focus will be on stronger US obviously jobs data, whether that obviously stimulates the FTSE and allows the UK economy to move high on the back of vaccine euphoria. Okay, so I think I've summarised all the key sort of fundamental currents in the market. Again, the ECB is on a QE frenzy, and it certainly is the Kool-Aid party there in terms of a weaker euro, and obviously the ECB has got you back. In terms of the UK, obviously it's not as easy monetary policy here, given the fact that the vaccine euphoria certainly seems to be taking centre stage, and our finances are obliterated to say the least. Okay, so it'll be interesting to see how we certainly move forward. Again, I've given you the levels, and let's await for Monday's trading, and let's react as opposed to preempt. Take care. Goodbye now.